Opportunities in agriculture and oil featured in this week's top picks for value stocks. Tracey Ryniec, our value stock strategist here, to elaborate. Let's take agriculture first, since it's at the beginning of the alphabet. And so is the name of the company, AGCO.
Yep. AGCO, you know, they're one of the largest agriculture machinery makers in the world. Yep. They're based in Georgia. You know, their competitors are Deere and CNH. So it's been an interesting couple of years for them, like maybe the best they've ever seen, because the farmers worldwide have had record income, certainly in North America, which is part of their huge market. They are global, however, but North America is huge. And that kind of is coming to an end now. It's not to say that the farmers are, you know, having a bad year this year or are expected to next year, but when you reach the peak, it's kind of only one place to go, and it's kind of down. So the incomes are going to come down. A lot of the farmers have already bought the equipment that they need when times have been good. So all the analysts expect, you know, the cycle which this company goes through is starting on the downside now. So it's something to keep in mind if you're interested in agriculture. That being said, AGCO is one of the more solid of, you know, the big agriculture makers. They've been beating the estimates. They've had good earnings, but I'm putting up the earnings projections for this year and next year. You can see 16% earnings growth for this year, so the cycle's still going, but by next year you're seeing negative earnings growth because the analysts just all believe that next year is when we're going to start to see the down cycle a bit.
In the economy?
Well, just in the agriculture sector in general.
I see.
So, you know, it's still not a bad play here. You're still getting a cheap stock that's trading around 10, 11 times here. The shares are at 2-year highs because they've been beating them. I mean, the story's been solid. It'll be interesting to see. They're reporting third quarter at the end of this month. So I would be, you know, I'm going to look in and see what they're saying is they're projecting out for 2014, if they give any kind of projections, or what they're seeing in the cycle. But, you know, otherwise they have all the value characteristics. They have the earnings growth this year, next year. It's something to watch. But if you like agriculture, the machinery area, you know, is pretty solid right now.
Okay. Then in that oil group, independent oil and natural gas exploration.
Yes.
You have Stone Energy, SGY, the ticker.
Yeah, you know, energy's been really down on its luck, I would say, the last couple of years. It's just been an out-of-favor group, and especially when everything else has been rallying in 2013, energy just wasn't, until suddenly, for some reason, investors said, hey, we forgot about energy. And a lot of the energy stocks were cheap, and oil prices are maintaining their kind of elevated position here. And so a lot of investors have been diving into the energy shares, including Stone here. Stone, you know, they're interesting. They have some deep water in the Gulf of Mexico. They are also in the Marcellus shale region, and this last quarter it was that region that the volumes were much better than anticipated. So they did beat on the estimate. They actually raised full year guidance based on what's going on there. So with the explorers, you got to really look at, you know, what are their production volumes? Are they actually getting the oil out of the ground? That's the key thing for them. They are. So, you know, analysts see pretty good earnings growth this year. Next year, again, just kind of like AGCO, I think they're unsure of what's really going to be happening here. You can really see it dropping off here into 2014. But again, it's a matter of what they're getting out of the ground. Some of there have exploration in the deep water right now that some of the analysts think will be a catalyst, but we have to wait and see if that comes to fruition. Okay. So it is a little bit more of a mystery with the miners or the energy explorers, because, you know, it's all about exploring it and finding it.
That's why they're called explorers.
Right, exactly. A little more risk.
See, I catch on quick.
I know. You can see with the chart, it was kind of not doing much until the summer, and then the shares really took off. They basically have doubled. Still trading around 11 times. That's still cheap. It was cheaper early in the summer. But like I said, a lot of the energy stocks look like this because everybody suddenly decided, hey, we forgot energy and it's cheap. So they piled in. It's still not a bad play here. I still think energy market still has momentum as long as crude stays elevated, and then we'll see what this sector reports this earnings season. But all systems are saying, you know, things are pretty good for the explorers right now. All
right. Well, I'm sure you'll be keeping an eye on it.
I definitely will.
Let us know of any changes there.
I like the energy, so yeah.
Yeah. That's why I said that.
Yeah.
Do you own either of these two?
I do not.
All right. Check out other stock picks on our website, Zacks.com. If you're watching this out in syndication land, get on over to that homepage. You can link to them from there. With Tracey, I'm Terry Ruffolo.